Good afternoon and welcome once again. Good evening, good morning, wherever you are. We are in day 2 of the review session, and today we'll be going through some of the core areas of starter course and also looking at the business blueprint. We're going to be covering the business blueprints today. We'll also be looking at the financials overview. So we're going to look at some of the core financial modules. And then we're going to move swiftly into the enterprise structure. So I'll take you through the enterprise structure, and then we'll then go on into looking at the assignments for today and any issues with the assignments for yesterday. So let's kick off with the business blueprint. So with the business blueprint, I'm going to start off by looking at what ERP is and looking at what we're looking at in terms of a case study of the model for generic businesses, and looking at how ERP can help in process improvements and also controls and also recording the financial transactions. So ERP is basically a system of processes where data is managed in an organization. Well, I just made up that definition a few years ago, and it kind of still resonates. So if you think about ERP, it starts mainly from, in the old days, from MRP, materials resource planning. And if you look at it from enterprise resource planning, you could probably redefine ERP as enterprise process management. There's lots of things happening right now within the space, which include analytics, data processing. You have AI, you have robotics, you have automation in transaction processing, and basically it's a system where processes are managed and data is managed in an organization. So that's basically what ERP is. Now, there are many functions within the organization, but I'm going to try and break it down into the barest minimum, and that's starting from process. So if you think process, a process will have an input and will also have an output. So every single operation that you perform within an ERP includes you entering something or looking at the output of something. And you have a lot of data that can be entered into the system, and the processes in terms of how that data is processed, and also the output in terms of how the data itself is used. So you have your data, which is the core things that you'll be really processing. And data now has a lot of definition. You can have images as data, for example. You could have, excuse me, social media data as data. You could have financial transactions as data. There's a lot of, it could be human resource data. It could be, so there's a lot of data that is processed within an ERP. And the question we need to ask ourselves when we are processing this data is who does what and why they do it, and also when they do it. So for example, when could be, is it at month end? Is it at the start of a transaction process? So who is the person who's actually acting upon the input of the data, or who is actually looking at the output via a report or so? And who could even be another system, which is an inbound, and output could also be another system. So, and it's a combination of all of these that determines what constitutes an ERP application. And also what is the data, why are we doing it, when is it done, where is it done? So there are locations which could determine maybe some rules. When I say rules, I'm talking about maybe legal rules, maybe corporate rules, maybe country-specific rules, maybe localizations. When is the timing? Why is it being done? Maybe it's because of you want to comply with certain regulations. Maybe you want to improve your bottom line figures. You want to make more profits for the shareholders, and so on and so forth. What is being done? That's the definition of that data. Is it financial data? What kind of data is it? Is it data that relates to something that's happening in the manufacturing process? Is it data that's happening in the procurement process, and so on and so forth? So there's a lot of different things that you need to put into consideration when you're thinking about processing data within the ERP. And the key thing that you want to ask yourself is that how is this done within the system? How do we do this? How is all this put together? And that's basically what we'll be covering in this course as relates to the financial modules, which I will take us through in terms of the area. So let's move into the case study. Now, in this case study, we're looking at generic business processes or generic business types. So what I've done, I've tried as much as possible to break things down into small components. I mean, that's the way I learn. Is as long as something is simple for me to understand, then it makes it easy for me to digest. So what I tend to do is break things down into small components in my mind and then try to process that. So if I look at everything happening within finance, for me, it's input, process, output. That's the core. And then everything else around that is the system that does it, the process, the data, who is doing it, why is it being done, when is it being done, where is it being done, what is being done, how do we do it? So in this case study, I'm going to break it down in a very simple way as well. And this is the way I understood it. And for some of you, you may have other experience, but of looking at the business pattern, or what I call the business blueprint. So for an ERP, is either we make or buy a product, which is maybe if we buy a product or make a product, we want to store it in some kind of warehouse, and then we sell the product. So input the product, whether we make or buy, store it in a warehouse, the process of doing that, and then selling that product. Now, and then we want to report on that. So this is where financial data comes in. So every business will be doing something similar to this, not in its entirety, because there are some businesses that only deal with services. So they sell services, or maybe they're set up for different reasons. Maybe they have an ethical reason why the business has been set up. But then data still needs to be managed. Data still needs to be reported on. And this is where we start to break things down into a bit further. So if I look at the simplest model for a business, it's a services company. And for a services company, you will have expenses, in most cases, you buy services, and then you maybe buy expense items. So from terms of what you're buying, because you're not making anything, but you're actually buying services, and you buy expense item. So your revenue will come from maybe selling services, and then your inventory, there's none. So you don't store things in inventory as the model. I'm talking about the model of companies here. Now, the next model is a trading company. This is a company that actually buys goods. So they will still have services as well, because there are people who would actually perform operations within the business. And then you have the revenue is mainly selling those goods. So they buy goods and sell goods. So again, it's not a model for that. And then inventory, they may also have stock that they store in inventory. So this could be different kinds of stock, because they're not making that stock, but they are actually buying the stock, buying those goods, storing it in an inventory, and then selling those goods on. So that's a trading company. And then you have a manufacturing company. Again, similar kind of model, a bit more complicated, because now you can also buy goods, you can buy expense items, you can buy services, but also you make those goods. And there are different rules when you're making goods, and when you're building, when you're in production, when you're in manufacturing. And then the next level there, again, you will sell the goods, sell services, but then again, you also have your inventory stock. So I've broken down companies into three main types. And most of the companies that you'll find today will fall into one or more of these types of companies. And if you have this in mind, it makes it easy for you to understand when you get into a project, where does it fit in? in terms of, is it a manufacturing company? Do they actually make goods and sell goods? Or do they buy goods and sell goods? Or is it a service company? So examples of service companies are like banks, for example, insurance companies, legal consulting firms, and so on. Trading companies are like maybe stores, like supermarkets, that have a stock and they sell those things. They buy and they sell. Some of them also would make goods, and there's a piece of manufacturing. It could be repackaging those goods and rebranding and so on. So all those will come within the realms of manufacturing. Again, there are different types of manufacturing. The purpose is not to go into the details, but then it depends on the type of company that will then break this down into other further components. Now, on this course, we're focusing on the first type of company, and then we can build on into the others much later. But then the basis of every company is on that service-based company. So what we're looking at on this course is that, we're going to build a model that looks like similar to this, the enterprise structure, where we'll have an enterprise which operates in multiple countries, and then it would have different segments within the businesses, which does different operations. So depending on the operation that is performed within the business is what will determine how you will set up the structure of the enterprise. And I'm going to go through some of the key areas that you need to look out for when you're setting up this case study. Now, we're going to move swiftly. Again, remember this is a review session. So when you start to watch the videos, which are in a bit more detail, you can, I've broken this down into a lot more detail, and you can go into those in a bit more detail when you watch the videos. And I'll tell you where to find the videos after I finish this presentation for about in the next half an hour or so. Now, within cloud, financials cloud, so we're now going into a bit more detail into the financials overview now. There are a lot of modules within the Oracle ERP Cloud environment. And I mean, I've just got here a lot of the ERP and the EPM modules. And the module is an area within the application that deals with just a certain component, like general ledger, like procurement, like payables, like expenses. So all those are specific areas. And the core financial modules that you will be looking at in general are the mainly the finance suite, which includes things like your general ledger, your payables, you've got accounts receivables, you have cash management. So we'll be covering all these four in this course. And then you have fixed assets, you have expenses, you have advanced collections, and then you have other areas like tax, payments, intercompany, centralized accounting. Some of this we'll be covering, but out of scope for this course is fixed asset, expenses, advanced collection. And there are reasons why I'm not including them in this course, and it's because of the length of time that it will take. Otherwise, we'll not be able to finish the core of what we want to do within the course. Now, and then the purpose of the course is to take you through the method and for you to identify roles that you can actually perform within an implementation. So I'm taking you through the implementation, not so much the modules. Again, you will learn a lot about the modules. You'll have enough information to go and take the exams. But what you're going to be learning is the practical things that you would do when you're implementing. And you can then apply what you're learning to any of the modules, any of the ERP modules, any of the HCM modules, any of the supply chain modules. So what you're going to be learning is the same in terms of the mode of consulting and implementing, rather than the details within each of the modules. But the details that we're looking at are only for these four core modules: GL, AP, AR, and cash management. Excuse me. Now, let's have a look at general ledger. So within general ledger, you have a number of core areas. Now, GL is the core accounting repository, and the cycle within general ledger goes into starting off with an open period. So the open period is used to enter financial transactions. So the first thing you do is that you open an accounting period. Next thing is that you create journals. Journals can come from your subledgers. Subledgers are the other ledgers like your payables, receivables, and so on. So transactions will come into general ledger, and then you will be able to create your journals. You'll be able to import journals. You can reverse journals in your general ledger. Now, you then need to post the journals. So that's the next thing that happens. Journals can be posted manually or automatically. It can be batched up as well. And what the journals posting does is that it populates another database. I don't want to go into technical details now because we're just looking at an overview. It populates an area within where the data is stored, which can allow you to run reports, which is the output of the journals that are entered. And this will enable you to do your month-end reporting, your regulatory reporting. I'm talking about your balance sheet, your profit and loss account, and any other financial accounting requirements that you need to comply with. And then you can also review the journals. You can reconcile your balances to your source subledgers and so on within general ledger. You've also got the revaluation and translation. Now, if you've got multi-currency transactions, then at the end of the period, you need to revalue your assets. You need to translate those transactions into the your local currency or your primary currency. And if you have transactions coming through in different ledgers, different currencies, then you bring everything to the same area within your translation and when you run revaluation at the end of the period. And then you have your consolidation, which will normally happen if you have subsidiaries. So for a large company, they would have a subsidiary where they would have to consolidate the details of the ledger together. And then you can produce your financial reports, which then allows you to review your account balances. And then next thing is for you to close the period. So what you have here are the main activities that happens within general ledger. There's a lot more detail in this. Some of them will cover during the course, and I'll give you details of where you can get into much more details about this process. So the next module that we're going to be looking at is payables. So with payables, you're looking at paying your suppliers. Basically, that's basically what payables is all about. Now, the process that we have here starts from creating supplier. Now, creating suppliers that will create the information for the supplier records, supplier sites, and other supplier attributes. Now, if you think about payables as an area within the old ERP where you manage supplier invoices, then it makes it easy for you to understand that all we're doing here is just managing invoices from our suppliers. And there are certain things that we need to look out for in the invoices to make us to know that, yes, we need to pay the supplier at a particular point in time, and also whether we owe them this money as well. So within the create invoices, you can match it to purchase orders if you're using purchasing, and an invoice is really an itemized list of goods shipped or services rendered with all the accounting of all the costs as well. And then you have validation. You validate your invoice. But one thing I also need to mention is that invoices can be imported from multiple sources or third-party applications. There's a module called Supplier Portal where the supplier can go in, enter the invoices, and then you'll be able to see those invoices being created. And also there are other programs that you can run for self-billing invoices if you've enabled that. But those are things that are details. And even you've got invoices that could come in from a scanned copy of an electronic invoice. So all those can be ways in which invoices are created. So you validate your invoice after the invoice is created, and the validation checks the invoices for correctness before it can be paid. And then you create your accounting. Now, after payment, also, you also create your accounting as well. So that's basically how the payables work. So key things: suppliers, which will have attributes, invoice management, payments. So two key areas: payments and invoice creation. And then your create accounting can be done automatically, and then that pushes the transactions all the way into general ledger for reporting purposes. And then you have receivables. Again, receivables, you're mainly looking at your customers, and receivables will enable you to create all your transactions necessary to correctly bill your customers. You can record payments, perform adjustments to customer accounts, and the transactions will include your invoices, your credit memos, debit memos, adjustments, chargebacks, and so on. So the core areas is the creation of your customer, and this includes the customer sites, the addresses, the purpose of the sites, whether it's a bill to, whether it's a ship to, and so on. And then you have your creation of your invoices. So you can use programs like the auto create program, which will allow you to create invoices automatically. And next part of that is to print the invoices or send them out to your customers, who then will pay after, by receipts. So they'll pay you, and then you perform the matching of the payments you receive from your customers to the invoices that you've sent out to them. And if they haven't paid, you can then, then decide to go down the collections route, where you can use the advanced collections parts to perform the normal collection activities. And then you can also create your accounting as well. So those are the core activities within receivables, which is the creation of the invoices, the collections, and the receipts, and the accounting. And the customer is the core object and the invoices that you're looking at within receivables. Next module is cash management. If you think about cash management, you think about bank, and it integrates with a lot of the other cloud applications. You can import bank statements into cash management, and you can reconcile either manually or automatically. This is the bank reconciliation. So you've got banks, you've got your bank setups, which is shared with also with the other modules, receivables, payables, and also payroll. So the bank is shared with all of this, and then the transactions are synchronized between the cash management module for statements reconciliation, and also all these different modules as well. And then you can also create what is miscellaneous cash transactions for things like your could be exchange rate adjustments, it could be your bank charges, it could be interest, and all of this can be done using your miscellaneous cash transactions. And in addition to that, you have the transfer of transactions to your general ledger. So you've got all of these modules, and you also have a method of creating the accounting, which is using an area of the application called Subledger Accounting. Now, what this does is that your create accounting process uses transactions and reference objects, data objects, and the accounting rules. So you have accounting rules to determine what your debit will be, what your credit will be, and so on and so forth. I'm aware that some people are not accountants, but just think about it, that the transactions that go into general ledger are accounting transactions, and there are rules that need to be written to enable us to decide whether it's a debit or a credit. Now, in some cases, those rules need to be amended, and Oracle has provided a platform that allows us to write those rules. There are a lot of rules that are pre-written, so don't worry about that, whether if you're not an accountant, how you're going to write these rules, but it's just for you to know that there is an area within the application that enables you to do that. So what this SLA, I call it SLA, or a lot of people call it SLA, what it will do, it will generate your journal entries for your subledgers. So when you run create accounting from Payables. It will create the debits and credits in general ledger, and also payables, receivables, cash management transactions, and you can do it online. You can do it, when I say online, you can do it immediately for the transaction, or you can run it again within a program. And you can also use it to create manual adjustments entries within your subledgers. And you can also review your generated journal entries and projected balances as well. In today's practice, you'll be able to run through some of these things that I've just gone through, and you'll be able to understand how all this comes together. Now, so again, I'm just taking you through a review of what you'll be doing today. There's a lot of detail in what I've just gone through in the videos, and I just I will implore you to go through them in a bit more detail if some of the things I'm mentioning are a little bit too much. Well, when I say too much, I'm going through it very fast, but it's a slower pace in the videos. But it's just for us to look at what are we expected to cover in today's session. Now, I'm going to talk about the enterprise structure. A very quick look at the enterprise structure. Now, with the enterprise structure, we're asking ourselves a few questions. What is the legal structure of the business? What is the organization structure? When I say legal structure, I'm talking about whether it's limited company, a PLC, how big is the business, and also what is the organization structure? When I showed you the model company, there were some areas of the business which were in certain countries, for example. So that's an example of an organization structure. So you could have your buying department in a specific localized center. So you could have a shared service center for that kind of structure. So those are the kind of things you look at within your organization structure. Where is your admin based? Do you have your manufacturing plant in a certain area, and so on? So all those things are things that you need to consider when you're looking at your enterprise structure. So the legal structure, the formation, the organization structure, how the company is put together, and also your financial structure. So when the enterprise structure is looked at, all these things need to be thought about. The business will usually give you all this information. All you're doing is just documenting this and applying what you've documented into the application. So let's have a look at some of these areas. The enterprise. So what exactly is the enterprise? From a legal structure, is a group of legal entities. So you're looking at the actual entity itself. So for example, GE, for example, General Electric, IBM, these are big entities. So you're looking at the enterprise. What is the structure of it? So you're thinking about the legal structure. How are the how is this structured legally? So GE could have GE Aviation, GE Capital, GE Healthcare, GE Power. They could even have some subsidiaries without the word GE in them. But those are the legal entities. So what is the real world representation of an entity within the structure? So you need to know what all those are. And this identifies a recognized party with rights, with responsibilities, which are given by legislation, and it has the right to own property and the responsibility to account for itself. So all these are the key things that you will use to identify a legal entity. So for example, it may have a, within the country where it's registered, it may have a legal entity ID, for example, like a company ID, and so on and so forth, a tax ID. So these are things that will enable you to identify a legal entity. So within your legal entity, you have other areas. So within the Oracle Cloud setup, you will set up a legal entity, and within your legal entity, you have something called a legal reporting unit. And a legal reporting unit, which is called an LRU, represents the part of the enterprise with a specific legal reporting obligation. So think about LRU as a reporting obligation. And it could be legal reporting units for tax purposes. So which entity pays taxes, for example. So that could be you identifying within your legal entity what's the legal reporting unit. You've also got your legislative data group. And this marks the legislation in which payroll is processed. So you're thinking about this as from a legislative perspective, when you have employees in the organization, which part of the organization actually pays the salary of people who work in the organization? You're probably wondering, why do you need this for finance? Now, there are certain activities that need to be performed by people within the organization, finance activities, and that's why you need to identify some of these things. An example is approvals. How would you identify your manager, for example? All this information is held in an area within the ERP suite called HCM. So that's an example of why you need your legal data group, you need your payroll statutory unit as well. You know, payroll tax, social insurance, and so on. And this is where you would look at these activities. Now, so that's basically your legal structure. This is your legal structure. Now, within your legal structure, there are certain things that ties your legal structure back to your accounting structure. And before I go into the organization structure, there is one element of it called the balancing segment value. So let's just hold that thought for a second. Now, for people who are accountants, you know that when you have a ledger or a book where you record your transactions for that legal entity, you need to balance your books by that legal entity's ledger. So BSV is a segment within the accounting structure that identifies the entity where the books need to be balanced by. But again, I said, hold that thought for a moment because we're coming back to it. Let's look at the organization structure. So within the organization structure, you have something called a business unit, which is linked to your legal entity. So a business unit is an area within the business that performs one or many business functions that can be rolled up into a management hierarchy. For example, payables, you've got invoicing, you've got billing, you've got customer payments within receivables. You have collections management within receivables. You have project accounting, you have procurement, you have requisitioning, you have receiving, you know, so all these areas are areas within the business where business functions are performed. So you need to have something called a business function or business unit function. So what area of the application is being worked on at that particular moment. So if somebody is entering an invoice, for which entity, for which area of the application are they doing this for? And then you have something called service providers. So in Fusion, I'm using the word Fusion because Fusion is also called Oracle Cloud applications. Service providers in Oracle Fusion applications is a model that defines the relationship between the business unit for a specific business function and for that business unit to perform an activity on behalf of other business units. An example of that is procurement. So where you have a centralized procurement, you can have one business unit performing procurement on behalf of another business unit. Another one is payments. You could have one part of the business, even within the same legal structure, making payments on behalf of other areas. So large organizations have this. In most small organizations, it's the same business unit doing all these activities. And those activities are done by what are service providers type of organizations, or I'm using that term loosely, is a service provider business function. doing things on behalf of another area within the business. Other things you need to think about within the organization structure is the inventory organization. And this performs operations like purchasing, inventory, costing, and so on. And then you have departments, which is mainly within HCM. And you would normally assign workers or employees to departments so that they can be associated with cost centers, and is also used for approvals. So that's why we need it within finance. So if you're going to be using some other modules, then you would also need to know departments, inventory orgs, and so on. So if you're implementing procurement, you need inventory orgs, for example, to receive your goods. Departments, if you have approvals based on cost centers, then you need to have departments, and so on. So let's have a look at the financial reporting structure. Now, when you enter financial transactions, you will need something called a ledger. So the ledger maintains the records and is a required component in your config. And you have primary ledgers, which are created by combining your chart of accounts, which is the structure of your accounts. I'm going to talk about that in a minute. Your calendar for your periods, your currency, the currency of that transaction, is it in your local currency or in a foreign currency, as well as other required options that are defined when we start to look at the implementation in detail. So your ledgers is structured in this format. So let's go through it in one by one. So you have your calendar, which I mentioned. You have your currency, you have your country, and then you have your accounting method. So I'll talk about the accounting method much later. So let's have a look at the chart of account structure from a financial structure perspective. So your ledger will have all of this. Now, your chart of account structure will have segments. So a segment will identify one of the components of your chart of accounts. And when this is combined together with all the other segments, it creates what is called an accounting combination. So your accounting combination is used for recording the accounting transactions and for journal entries. So each segment is associated with what is called a value set, which is a set of values within each segment. So if I look at these segments that I've got here, I've got 1, 2, 3, 4, 5, 6 segments. Now you can have up to 30 segments, and each segment can have within it 25 characters. Now, most companies will have maybe up to 9 segments. Yeah, if you're getting beyond 9, 10, then you need to probably look at how you've designed the chart of accounts. But there are certain segments that are required. So for example, you need to have a balancing segment value, BSV. So this ensures that your journals will balance for each of the balancing segment value. Your segment labels will identify which segment is the balancing segment value. You've also got an account segment. So your account segments will determine the type, the account type, whether it's an asset, whether it's a liability, whether it's an expense, revenue, or equity. So that's your account segment. Your cost center segment, again, is used to track costs, functional cost types, and they are required if you're implementing expenses or fixed assets. So again, we'll talk a bit about this in a bit more detail later. And then you have intercompany. So if you're a company with lots and lots of different companies, then you would most definitely have an intercompany segment for transactions between each of the different companies. And then this one here is line of business, again, and this is a spare segment. So some of these segments are mandatory. BSV is mandatory, account is mandatory, cost center is not, intercompany is not, line of business is not, and spare segments are not. But from a design perspective, I'm going to take you through that much later in the course, but I'm just giving you an example of the structure here. So you've got segments. Segments, your chart of account structure will have segments. So segments will have values inside of them. Your chart of account structure can also have another type of structure called a structure instance. So you can have multiple representation of the same structure, which are defined maybe by a country. So I can decide that I'm going to have the same structure, but the values inside my segments can be different based upon the country. And that's because the country can have different rules of operation. So again, that's also possible to have a COA structure instance. And then you have your value set, which are the individual values within each of these. So your BSV could have the list of all the legal entities. Your account structure will have the list of your nominal accounts, your nominal accounts, your assets, your liabilities, expense, and so on will be in here. Cost center will have the list of maybe all your departments and the cost center value assigned to it, and so on and so forth. So that's this, and all this will be loaded into something called a value set. So value sets contain values, and the values gives you the combinations, which is called the code combination. And within each of these values, you could have security within it, which is your segment value security, which can limit how your users will access the values within those segments. So you can restrict the values to say that somebody in a certain BSV cannot see data, which represents data in a certain COA structure instance, for example. So those are the kind of things that you could put in from a security perspective. And then you have your account hierarchies. So when you build this structure, you build them into a hierarchy structure. And again, you will see a lot of examples of this in the detailed video of examples of the hierarchy structures as well. And then you have cross-validation rules. So I can limit how my values are used between each other. So I can say that if my BSV value is, let's say, a certain country, or I can limit maybe the cost centers that they would have access to. Or maybe I can say that my balance sheet cost centers can only use balance sheet account values, for example, and so on. So you can put in rules that will limit the risk of errors of putting in a combination that doesn't align with your accounting. So that's the core financial structure. So in summary, you have the legal structure, you have the organization structure, and you have the financial structure. Now, I've just taken you through a run through of what you will cover in 2 hours in the video with a bit more depth in the video. But in terms of the exercise or the assignment for day 2, the key things is that you're going to continue with the standard transaction flows. So you're going to go through the receivables, general ledger, and also some reporting. You'll be able to see how to enter the data, how to process that data, and also how to report on that data over the next day or so. So it's question time. So let me know if you have questions before I take you through some of the things that you'll be looking at today. Any questions? Any issues on what we did, on what you did yesterday? Any questions? Yes, Bella.
Hi. So
Hi.
on the enterprise structure, the colors that you use in I'm just trying to understand where you have orange, that means we're looking at the legal structures, right?
Oh, okay. So, well, I mean, this is just my presentation. So orange, so all these areas,
yeah,
is the legal structure. Yeah.
All right. So
yeah.
the blue, that area,
The blue is your,
I guess.
Yeah, that's mainly your org structure.
Okay, so we have the legal structure, and then inside,
Yeah,
like legal entity,
you have the
the
organization structure. Yeah, which includes these two as well. Yeah,
inventory
and then the bit at the bottom here is your financial structure.
okay.
Yeah.
And then the bottom is the financial structures.
Yeah,
Oh,
yeah.
all right.
Yeah.
Okay, thanks. The inventory organization, is it the same as like expense? No, that will be different. Expense organization.
The inventory organization, sorry, say that again. Is it the same as
Okay.
what?
No, never mind. I'll
Okay.
try and create an invoice then. There is
Yeah.
somewhere where there is organization there. I just want to, I'll probably send that as a question.
Yeah, yes, please. Yes, I was also going to mention that when you go through the materials, this is the video for, so this is the assignment for today. Now, if you're going through the assignments and your stock, so what you could do, just go straight to the community. You've got questions, right? Just ask the question here. So I can actually create one here called Day 2 questions. So that it makes it easy for us to see the questions, and then I'll be able to very quickly reply to them. Yeah. So let's have the questions here. Now, somebody was asking in terms of where to get access to the environment. So that was, you can, and everybody can see that. So let's use questions, day 1, day 2, and then we can see this as well. So that would make it easy. Yeah, but that's good that you've identified these bits, you know. Yeah. And again, in this slide here, you can see examples of PSV values, example of an account value, an example of a code combination. So you could have GE as the enterprise, legal entities could be GE Capital, GE Aviation, business unit could be GE Procurement, GE Payment, and you could have inventory org as GE Stores, departments could be admin, could be stores, and that's basically how the structure can be put together. Okay, any other question? Okay, there is a question here. Do you have this training documentation in PowerPoint format? Okay, somebody was asking that. So, okay, send me it. Well, if you put a question on the platform, then I'll be able to reply that. But the key, I think what you're trying to ask is that, do we have this in PowerPoint format? PPTs, yeah. And then someone was asking, if you have a vehicle type as electric car, how do you deal with that? How do you claim mileage? Okay, that is really specific to expenses. Again, send that to me as a question on the, because that, I mean, that's not directly related to what, I mean, that's probably related to the exercise that you were looking at, but not directly related to today's presentations. But if you send me the details, I may be able to give you some pointers as to how to do that. That's more of a solution. Somebody's asking, how do you claim mileage on an electric car? So that's a solution aspect. So yeah, there are ways in which you can do that. But then that's the details of setup, which a lot of people may not be able to understand yet. Yeah. Yeah. Okay. Any other questions?
Yeah, hi there. Can I just ask a question? When I went through the assignment, I could see that it's progressing in terms of the percentage you've covered. And
Yeah.
when I went out of it and went back in, it all disappeared, meaning it went back to 0.
Oh.
Is it meant to happen that way, or is it meant to just
No.
what you know, record of where you got to?
Yeah, it's meant to, reference where you got to. So I believe you're talking about when you're going through the course areas. You're talking about this bit here.
Yes, on the left, yeah.
Okay, so let's go back to dashboard. So when you complete a section, it should tell you that you've completed. That's
Yeah,
interesting.
on the top there, you can see the 2%, and then it increased to say 16. And when I went back to it, it reverted back to 2%.
Wow. Or did you click on complete and continue?
Where's complete and no, I didn't.
At the bottom. Maybe that's why. Yeah.
Right. Okay.
Yeah. So do that, and then let me know how you get on. Yeah.
Right. Okay. Thank you.
Okay. Thanks, Tony. Cheers.
It's all right. No problem.
Yeah. Any other questions?
Just very quickly, when you go through the assignments, you've got the test bit where you're supposed to go in with the password on the environment, and you say use the user ID. That's in the course bit, but I can't see the user ID.
Right. So if we go to expenses, this is the first one.
Yeah.
So sign in as Chandra Williams. That's the user ID.
Okay. Right.
Yeah.
Okay.
Yeah. So
I know that was mentioned yesterday, but I always
No, that's fine. That's fine. So that's the username.
Yeah.
The password will be the assigned password. Yeah.
Yes. Okay. That's where I'm going wrong. Okay. Thank you.
No problem.
Oh yeah, I've got a question. When I went through the assignment and got to the purchase ledger, when kind of running the auto accounting.
Purchase ledger.
Yeah.
You're talking about payables. So where exactly?
Payables. Yeah.
Okay, payables. Yeah. Okay.
Yeah. Getting to the auto accounting. Like
Create accounting.
The create accounting. Yeah.
Yeah.
It says like on the text, the practice one, it says okay, how to view the accounting entries in GL, but I couldn't. All the various responsibilities or people didn't have access to the GL at that point.
Oh, that's interesting.
Yeah.
So who did you log in as? Roger Bolton.
Roger Bolton, yeah. So I don't know if I made a mistake. It was, I don't know. But I went in there to see what I could.
Okay, that's interesting. Let me just check.
Okay.
Let me check. So if I go into we're using 90, yeah. Quite slow. So let's wait for it to load. Right, so okay. Okay, you're viewing the accounting from your invoice, and then you go into general accounting journals. So, right, okay, I know what's happened. So by the time you go through to today's exercise, so the user is actually different. The user you need to use for this is Casey Brown. I'll make that change.
Okay.
Yeah, thanks for that.
Okay.
Yeah. So the user should be Casey Brown to perform this part of the exercise. Yeah, thank you.
Yeah, and I think one other thing I'll say is I think when I tried to go through the exercise, like with the expense and stuff like that, going into the payables, sometimes there were some errors which were saying it's against kind of rules and things like that, but then the supervisor can still process it. But I found that when I went to create the payments, and usually it picked up some other things that had already been done, and then
yes,
it dismissed it. But
so
then
what's happened is that other people have actually created payments, so it will probably pick up other people's payments. Yeah, that's what's happened.
Yeah, it rejected it, so I had to do it all over again. But it's good practice. I had to do it all over again and stuff.
Okay.
So yeah.
Okay.
Yeah.
Thank you. Yeah, I think what would be good as well is, so those type, especially this one.
Yeah.
If you can put this in the questions area.
Okay.
You don't need to wait till this review sessions before we resolve that issue. That's something that could have been done.
Okay.
But that will also help other people who are stuck.
Yeah. Okay.
So put, thanks a lot for that, David. That's really good. Thank you.
Okay.
Okay. Any other questions? Are we good to go for tomorrow?
Oh, yeah, one more question. You know, like for example, in instructions, as we go in front of us on the screen, where it says enter something as NN.
Yes.
If we all just use that same NN?
No, you use your initials.
Oh, okay.
Your initials. Yeah.
Okay.
Just use your initials. Wherever you see NN, just use your initials. Yeah.
Okay.
I think I mentioned it somewhere, but I can't remember. Okay, I think I probably need to go back and I mentioned it here. NN is your your initials, and I've used it here as an example. Yeah.
Okay. All right.
Yeah. So just use your initials. I'm hoping that no two people have the same initials. If you discover that your initials is used, then just put another one in. Yeah. Yeah. Okay. So thank you very much. So tomorrow, same time, same place. And yeah, see you tomorrow. Thank you.
Thank you.
Thank you, everyone. Cheers.
Thank you.
Thank you.